So I assume you're first talking about the Netflix bid, if we want to start there. And so yes, I think the answer to your question is that there's likely to be more synergies from a Netflix Warner Brothers combination. I think there's bound to be some cost efficiencies when thinking about the programming spend and content spending of putting those two companies together. But that's where the company has started in terms of laying out what the
Right.
cost synergies are for this deal.
Using the pro ratio EV to EBITDA. I learned this from Michael
Nice.
Nathanson.
I know.
It's the only reason I know it. Robert Fishman, if you get synergies over 6 billion, do you get EV to EBITDA, which proves valuable for Netflix shareholders?
So let's break this down. So what Netflix has said so far is $2 to $3 billion of cost synergies. Paramount Skydance has thrown out the $6 billion cost synergy number because they are also buying the global networks portfolio. So the numbers aren't really apples to apples because you have to clearly understand that when putting the Paramount Skydance portfolio of cable networks together, along with the Warner Brothers portfolio of networks, that there will be much larger cost synergies when thinking about that versus Netflix, which is only just bidding on the streaming and studio assets in Warner Brothers. So again, it's not exactly apples to apples when comparing the two numbers.
Hey, Rob, talking to some investors here, one of the narratives I'm getting is for Netflix, this is a really nice to have. For Paramount Skydance, this is kind of a must have. Do you view it that way?
We do. From the Paramount Skydance side, and why we upgraded Warner Brothers Discovery at the beginning of the year is we thought that the consolidation in the industry was inevitable. I think Michael's been on the show, over many years talking about this.
Sure.
And so when you think about who the natural dance partners are, it was Comcast, and it still is Paramount Skydance now after the Skydance deal, and Warner Brothers Discovery. Those three are the most natural players because they're all subscale in streaming. So when thinking about how to solve that streaming scale issue from a global basis, it's just natural to think that you need to see some combination of those players. And so that's essentially what's playing out in front of us. Paramount Skydance needs these assets in order to accelerate the timing to reach the scale that they're desiring on a global scale basis for
Yep.
Paramount Plus. So yes, we very much think that the combination with Paramount Skydance is a must-have.
Rob, from the other perspective, if your Warner Brothers Discovery, aside from price, do you think they have a preference for one or the other, and why?
So I think what we saw so far is that the preference was Netflix, and they announced the deal on Friday, and if you believe everything that's been written and that the Paramount Skydance has put out from their perspective, they didn't continue to engage with them. So I think that the preference on the Warner Brothers Discovery side so far was Netflix, and that might be for a few different reasons if you want to break that down. I mean, clearly Netflix brings an unprecedented global scale when thinking about what the opportunity is for Netflix to monetize this content, and Warner Brothers has licensed that content to Netflix already, over the many years. So Netflix has essentially perfect information knowing how the content would perform on their platform. And that's the opportunity that I think that the company sees when monetizing this content going forward.
Robert Fishman with us. We're thrilled he's with us today. He's with Moffettnathanson. To give you perspective here, Moffettnathanson out of Sanford Bernstein redefined independent media research. Again, their research here in the last couple of days has been just absolutely superb. Bloomberg Surveillance this morning brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. We continue with Robert Fishman, Moffettnathanson. Robert, one of the joys of this process has been Michael Nathanson's long note. here on the merger on the first time he met the leadership of Netflix in a nondescript office years and years ago. And he says it's Media 101. Do these mergers succeed, or are we now at the point where it's just ego and there are going to be bad outcomes down the road?
Unfortunately, we do have a long history that Michael and I have been a part of, where media M&A is a lot more difficult to pull off than just what the spreadsheets tell you. And yes, you can get to accretion, you can get to potential upside over the longer term when thinking about how a new owner can take the assets and redefine them. But the long history of media M&A suggests that it's even more difficult than we would all seem. I think a lot of that comes down to the culture, and when you start smashing different cultures together, that obviously becomes a challenge, especially in the media industry, given the creative output that is needed. But also just when thinking about where the headwinds and the tailwinds are for the industry. A lot of these recent media mergers have been focused more on the cable network side, and clearly that the linear ecosystem has had challenges over the past few years. So even with the M&A potential and the cost cutting where we started here, we haven't seen the true upside of those deals because it's really just enabled them to cut costs to offset the revenue headwinds.
Synergies, that's what
they call it. Robert, the regulatory hurdles here seem pretty high for both players. How do you game that out for both of these bids here?
Yeah, there's a lot of noise around regulatory approval right now. I mean, clearly, from the Paramount Skydance side, they seem to have an upper hand right now, just in terms of the administration relationships that they have. But at the same time, the true answer should come down to how the market is defined. And I think what Netflix is out there talking about is when you view the overall market to total media consumption and look at how Nielsen measures it, Netflix today only has 8% of that total pie of the viewership pie in the US. And so when you compare who Netflix is actually competing against, YouTube actually has a bigger share of that viewing pie. Mm-hmm. And so on the streaming side. And so when you start thinking about all the different portfolio of assets, Netflix actually is not number one or two. The traditional media guys are above them in terms of when you combine the linear television viewership.
Well, cut to the chase, Robert Fishman. Do you think the government's going to buy that?
I think it comes down to how you define the market. And I think Netflix has a really strong point of view here, because we haven't even talked about TikTok and Instagram. So that there are lots of different ways that people engage with content these days.